I don't care what the true inflation number is today. I care about what it's going to be like in 3 months. And maybe their number will stay low. Headline CPI is the one that I have confidence in will be above 4% as we keep getting this data. And the reason is Bitcoin, it usually brings the anger out of people. This is when people would want Bitcoin. On the other side, when the government needs to have excess spending, and regardless of what's happening on the fiscal side, we have a fiscal impulse right now. Tax refunds, very high. Tax receipts, very low. Bonus depreciation for companies, which is another form of stimulus, is having a huge impact. Craig Fuller talks about this. I think all of these kind of half deflation, half inflationary pressures are creating an issue.
He argues that Silicon Valley is quietly confronting a brutal reality. As the agentic AI world arrives, many traditional software companies lose what investors used to call terminal value. If AI agents can replace workflows, build competing products faster, and push software pricing towards zero, then the long-term margin structure of many SaaS businesses becomes questionable. That's the overhang on software, and it's why the market is beginning to reward a different set of winners. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
The overhang or the reality that I think probably started with just Silicon Valley recognizing that as the agentic world came, we have no terminal value on these companies, has set back in. So I've posted about this a few times over the course of the last month. When we originally had the correlation break, it was a day where Oracle broke out, software names were bouncing. But Wednesday, I posted in X. And I said that if you look at what's performed so far this month, within the IGV, which is the software ETF, almost all of the top 10 names were related to crypto. So let's separate Bitcoin for a second. What is happening is the miners were kind of the ones that led way before Bitcoin. And I mentioned them last week, I think here, but definitely on my weekly, where I just said we've reached a point of compute shortage, and if you can scramble and get anything related to AI, that's where you want to go. We have bottlenecks throughout the world now. It was only memory 4 months ago, but now it's spread to CPUs, and because of Iran, it's spreading to chemicals and other places. You're going to have bottlenecks the rest of this year. So software still has the issue of AI progress, but then the Bitcoin miners recently have started to benefit from the reality that we don't have enough compute. So the question is, where does Bitcoin sit? Well, first of all, with the miners getting a bid, well, that's obviously good for Bitcoin and for no other reason with the ecosystem. But I think an important dynamic is shifting, and you and I have differed on inflation. There is really no doubt in my mind that inflation is going higher. Now, I want to separate this again because I think we talked about this last week, and so people hear this. I do not think the housing market's going to get better. I do not think wages are going to get better. I do not think the things that traditionally are correlated with inflation are going to get better. But there's no way to refute what came out in the PMI numbers this Thursday. Service and manufacturing PMIs are moving higher. And most of them are at the highest levels since 2022. So you are getting back into a world where inflation has peaked on the survey side for all of these things, which has a very high correlation as a leading indicator. And this is the thing I want to say to people. I don't care what the true inflation number is today. I care about what it's going to be like in 3 months. And maybe their number will stay low. Headline CPI is the one that I have confidence in will be above 4% as we keep getting this data. And the reason is because the manufacturing bottlenecks are real and they are big. And I heard this today in listening to a podcast with Craig Fuller. And everyone should listen to this podcast because I like hearing people that talk about the economy and what's happening. This is a very unique economy. If I wanted to figure out where inflation was over the last 17 years, we were in a bear market in commodities for 17 years, except for COVID. So the reason I kind of took a shot at people fitting things to historical data is today's world is not the same as it was from 2010 to 2015. We are in a commodity bull market. We have shortages across the globe. And what Craig Fuller talked about was freight is out of control, all because of AI. all because of the one big beautiful bill, all because of lower energy costs here and higher energy costs around the globe. So natural gas is low. That'll help inflation a little bit down. Oil's higher, gas is higher, diesel's higher. That'll push it up. But the reality is memory prices, CPUs, semiconductors, that stuff, there's no end in sight. And the reason I bring this up for Bitcoin for people, at some point, Bitcoin is either in the abundant bucket or it's in the PMI sensitive bucket. It's a PMI sensitive. Its returns are there. The only thing missing, which I still think will happen, is year-over-year CPI will get above 4%. 3-month bills will stay below 4%, and we'll have negative real yields. And I think that's what's happening is software is in a deflationary problem. So your world, Bitcoin's now moving into the inflation. And I want to kind of use the Jeff Booth for this because I think he does the best job of saying that there is always deflationary pressures in a credit-based fiat system. Innovation is deflationary. We both agree on that.
Yes.
Woo. If people are not getting jobs as easily, if they can't move up the corporate ladder, if there's affordability issues, well, that's the deflationary pressures that usually lead to more government stimulus. Well, we have government stimulus happening. So when I say negative real rates, that may be some kind of economic wonk to people and they're not really thinking about it. That is these two forces at the exact same time. To have negative real rates, you have deflationary pressures, which are keeping short-term rates low, and you have inflationary pressures, which are keeping CPI high. Now, in the US, we don't have this, but in Brazil, they have what's called a basic basket. The basic basket that people need to survive on. Well, I think the basic basket for young, educated people in the US, where's my housing? Can I get an apartment in a city I want to live in? Nope, not good. Where are food prices? Okay, well, we have commodity inflation right now. Fertilizer prices are going up. Food inflation is not coming down. That's going to be an issue. Can you get a job anywhere you want? Yeah, you can get a job, not anywhere you want. You might have to take a job not in the education, based on the education you have, because there's disruption happening out of nowhere in the labor force. And so you might not be able to do this job. You might have to go do a different job, even though you have an education in this job. I think we've taken the basic things of, let's say, an advanced society and made it very challenging. And that to me is the deflationary pressures on the one side that Bitcoin, it usually brings the anger out of people. This is when people would want Bitcoin. On the other side, when the government needs to have excess spending, and regardless of what's happening on the fiscal side, we have a fiscal impulse right now. Tax refunds, very high. Tax receipts, very low. Bonus depreciation for companies, which is another form of stimulus, is having a huge impact. Craig Fuller talks about this. I think all of these kind of half deflation, half inflationary pressures are creating an issue. Here's the one thing I will say about innovation. When you want to invest in innovation, in a deflationary world, you're trying to find what Jeff Bezos said during the last 15 years, which is when Bitcoin was created. And what did Jeff Bezos say? Your margin is my opportunity. There's no more margin now in code-based stuff. It is in a free fall. That is why software stocks are getting up. So where Bitcoin benefits is it doesn't get hurt by that. So it's got the one side now, the inflationary side, which it will benefit from. And on the other side, where it benefits from deflation is from the opportunity cost that an individual investor has. I need growth assets. And this is the Rick Edelman argument. How do I invest for the next 40 years? Because I'm going to live longer. What growth assets can I have? Because those are the ones that I can be in. Growth assets are not working. Hyperscalers and all of the things related to software. I think this is where Bitcoin separates itself in the second half of the year because of that dynamic playing out, both inflation and deflation at the same time. What my views have been this year, one thing has stayed constant. We will have earnings growth and we will have nominal GDP. End of story. We might not have real GDP to the level people are used to, but if nominal GDP is 7 and inflation is 5, then you get 2% real GDP and everyone goes, oh, it's not. Nominal GDP drives revenues, nominal GDP drives earnings, plain and simple. If companies are able to control their expenses via AI through labor, then that's where profit margins are sitting up at high levels. So I think what will end up happening is you want to be long the stuff tied to the bottlenecks in the physical hardware world going forward. So this is where I've talked about semiconductors and commodities and servers and anything physical. The software stuff, I think, will be in trouble and will remain in trouble. It has done such a big fall already that I'm not sure how much lower it can go overall, but I think it'll underperform. But when you look at stocks relative to nominal GDP, that's where I've said, if I had to guess, I think 10 years from now, public companies are not going to be the ones benefiting from AI. It's going to be private startup companies that actually never go public. There's going to be a change in the capital structure. The financial guardrails of the world are shifting, and they're shifting towards crypto. That combination of AI disrupting public companies, because public companies just can't adopt AI because having a lot of people is very difficult. And I think they're all learning that. And I got to be honest, one of the stories that'll happen before the end of the year, I think a lot of these big companies are not going to see the benefit come through the way they think, because it is just so hard. And I'm sure you've got your own experiences. How do we integrate this in a way? The costs are going higher. The speed of it is going so fast, and startup businesses don't have that friction of people inside the business, culture inside the business, legacy systems inside the business. It is a very difficult thing. And I just got to tell you, it's like telling a 60-year-old, athlete, hey, why don't you go play football again? They might be in great shape, but they're not in great football shape. I don't think companies are in great AI shape. I do not believe that AI, it's going to take a long time for it to understand the nuances of what drives people's decisions, the psychology of people. I just don't think it's going to be there quick.
Visser believes we've entered a genuine compute shortage environment. A few months ago, the bottleneck was mostly memory. Now it's spreading to CPUs and other components. And geopolitical stress, he mentions Iran as one of the accelerants, extends the bottleneck problem into chemicals and supply chain inputs. His bottom line, we should expect bottlenecks to persist through the rest of the year, and markets will increasingly reward anything tied to scarce AI infrastructure. That leads to the big question: where does Bitcoin fit?
Let's talk about mythos, whichever way we want to pronounce
Mythos.
it. Mythos.
I've made the decision. I'm drawing a line. It's Mythos.
Take that. Mythos. You think that this story should scare a lot of people? Why?
So the story is that apparently unauthorized users had access to it. Again,
what does that even mean?
Yeah, that probably means they think the Chinese have, because there was a report today that whatever the case is, because the Chinese have apparently been going through the distillation process with all the whatever the case is. I think it says two things. One is, it is ridiculous for people to not think that people can hack into anything already. It's just, it's going to happen. Number two, it does mean that people should expect that one of the biggest dangers from AI is AI itself. And I do think there's going to be a hacking situation this year. I do think cryptography is going to become a place that is more respected, which will help Bitcoin as well. But I do think
Bitcoin has been all over that one for a decade and a half.
And again, you're going to have issues for sure with artificial intelligence. When you get to this much power in it, it's just, we're accelerating so fast that we're not ready for it. So the same thing I said about enterprises, they don't know how to use it. There was a great post by Aaron Levy from Vox.
He's excellent on the AI stuff.
He's great, and his X posts are very thought out. And again, you're talking about someone who's at the game. If you strip out, I mean, software cares about software, but his whole thing about how do you set up an architecture of AI for your company if the architecture you're using that you decide on today is obsolete in 3 months from now? So think about where OpenAI was 6 months ago. I think Gemini was ahead of everyone 6 months ago, and 6 months before that it was OpenAI, and now it's Anthropic. Well, if Anthropic doesn't have enough compute, and all of a sudden OpenAI rolls out some of that excess spending they did in their Blackwells, allow them to get to the agentic side, is moving to Anthropic the best idea? I think it's very difficult for people to figure this out. And I think governments, everyone is going to have a hard time with it. So with Mythos, the fact that this model is such a step change over the last one, how do you deal with this? What do you deal with it? And that's why they've been giving it to banks, not just in the US, but now they're giving it to banks in Europe for the same reason. I just think it's going to be an issue that people should be ready for. It won't be the end of the world because we'll figure out defenses for it. But I think to get to a solution to the problem, we're going to have a lot of problems first.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.